I firmly believe that more people do more damage after winning a trade than losing a trade. And it's because when a trader wins, your brain will update its expectations about your ability to win. And so this win is treated as information about skill or accuracy. And because of this update, your perceived risk decreases, even though market uncertainty and risk remains the same. Now, a main cause of this is because almost every trader out there is taught how to make money, but you're not taught how to keep it. And because of this, your wins became the main source of feedback on your ability to trade. And so a win signals success, and success signals that current behavior should expand. So after a win, exposure increases, position size grows, trades are taken more often, and rules do not feel as necessary because you won. So you're good at this shit. Now these changes happen because the trader believes that recent success reduces the chance of future loss. But increased exposure places more capital at risk. And because exposure is higher, the losses you take carry greater impact. And so a small sequence of losses can remove more money than the original wins created. And so after a loss, exposure often decreases. Risk feels higher and caution returns. Because exposure is reduced, damage is naturally limited. Now, losses hurt, but they do not usually escalate in the same way. And so a key factor is how behavior shifts in response to outcomes. Winning leads to expansion, and expansion increases vulnerability to variance. Losing leads to contraction, and contraction limits further damage. Now, this is generally speaking because some people lose and trade more, but this is the overall consensus. Now, this pattern continues because the trader's learning system treats outcomes as instruction. Your wins authorize risk, losses restricted, and the trader was never trained to keep behavior constant across outcomes. Therefore, success becomes a point where all your stability in trading breaks down. The account deteriorates not because losing occurred, but because winning triggered behavior that placed profits back into unnecessary risk.